Patriot Nation, listen up, because I'm going to show you something very exciting. If you bought your home in the last 12 months and you're sitting at an interest rate of 6.5 or higher, I'm going to lower you down to 4.99%. And I'm going to save you on average about $230 a month. And if the appraisal comes in correctly on your home in terms of valuation, we're going to not only save you $230 a month, you're going to skip a payment, and you're going to get a chunk of change back from your existing escrow of about $5,000 to $8,000 to spend on the holidays or whatever you want. So it's the ultimate refinance, I call it. This is something you're going to want to share with your friends or family. So watch it all the way through. Let's kick off this rodeo right now. Hi folks, I'm 𝐶𝐏𝐿. I'm a mortgage patriot on your side, here nestled in the hill country above San Antonio, Texas, serving all you proud Texans and all you great folks all around the country. So as always, a very informative and important video for you. I'm calling the ultimate refinance. Why? Because in the fourth quarter of any year, and here we are in the fourth quarter of 2024, rates have been coming down now for a year. Maybe the media hadn't quite caught on yet, but we had that spike, of course, in 2022 to 2023 and even into 24. But if you bought your home previously and you're sitting at an interest rate, once again, of about 6.5 or better, I'm going to save you quite a bit of money. I'm going to show you other benefits besides just saving the money. But if you would, hit the subscribe button below, and that really helps bring my algorithms to the forefront with YouTube. It helps my videos. You can see my valuable content here that I've been creating over the past year for you. I specialize in refinancings, in first-time home buyers, in investor loans, all kinds of niches, if you will. So let's get into that content right now. So let me go over why I call this the ultimate refinance, because there's four major benefits. And the first one is the obvious one. That's the monthly savings. And I mentioned a monthly savings of averaging $230 a month. Where did I get that figure? Well, because the average first-time homebuyer purchase price across the country is about $300,000. So if you bought your home, let's say 9 months ago at $300,000 and you're at 6.5% or higher, you're going to save about $230 a month if I can get you down to 4.99%. Just that simple. That's benefit number one. Benefit number two is that you get a check back from the escrow. A lot of people forget about this. You've been building escrows all along. Besides monthly principal and interest, you've been paying property taxes or property insurance into your note. That's been accumulating in a side account. When you create a new refinance, you're going to create a new escrow account. So you get your existing escrow account back in the mail, literally a check. So you're going to see a check 2 or 3 or 4 weeks later after the completion of the refinance to the tune of maybe $5,000 to $8,000, somewhere in that range. That's not a small amount. And of course, that could fund your Christmas, fund a trip, or do whatever you want with it. The third big benefit is that you get to skip a payment. So for example, if you were to close a refinance in October, you would not make November's payment. You would skip November and you'd start up with the new rate, the lower rate, in December. So that cash flow that would be going out of the window is remaining with you. And so that's a big benefit. And then normally on a $300,000 purchase at 6.5%, your total PITI, your total payment is about $2,600. So you're saving about $2,600 just by skipping a payment. Great benefit as well. And lastly, the fourth benefit is that you are typically coming out of pocket for very little, if sometimes zero, believe it or not, zero out of pocket at closing to actually do this transaction. And I'm going to explain all that with an example. But that is a major advantage, obviously. If you can get all this done and come to the table with very little or nothing down to actually get the transactions started and completed. So let's make some assumptions with some simple math, because refinances are always about the numbers. So when you have a $300,000 purchase, 3.5% down for an FHA loan, that loan amount is going to be $289,500. That's for 30 years. That payment comes out to $1,830 approximately. And assuming you did that about 9 months ago, currently your new loan balance is going to be roughly $287,000. And if we can get that down to 4.99%, and now I'm going to make a big assumption here. I'm going to add to that loan, $287,000. I'm going to add $10,000. Why am I going to do that? Because we're adding closing costs, which we are allowed to roll into the note, and we're going to allow for the new construction of a new escrow account. So we're going to pre-fund a new escrow amount. So both of those together combined is going to be about $10,000. So now the new loan amount is going to go from about $287,000, where it is existing, to $297,000. $297,000 at 4.99% produces a monthly payment of about $1,594. What's the difference between those two monthly figures? $237 a month. There's your $230 plus per month savings. incredible. What could you do with that money? Well, obviously, pocket it and do what you want, but you can financial plan with it. Here's an example of just taking that $230 a month savings for 15 years, put it into a mutual fund. Most mutual funds have been earning 6 to 8% over the course of their lifetime for multiple decades. So even at 6%, $230 a month creates an $137,000 account 15 years from now. You can fund college with that. You can help buy the purchase of a new home, anything you want. That is a giant savings. Anything above 200, in the 230 range, fantastic. Let's make this even more exciting for you, and why I call it the ultimate refinance is because let's look at that return of the escrow check. So again, when you're refinancing, you're establishing a new escrow account with your new lender. If you look at your existing mortgage statement, you're going to see your monthly payment is broken into parts. Most of it is going to go to principal and interest, which goes to the servicer. All these payments actually are going to go to the servicer, but then you have a portion that's going to go towards county taxes. And that's being accumulated with the servicer. And at the end of the year, they send that whatever's in there, that escrow account of the property taxes, they send it to your county to pay for the year-end property taxes. So you're going to get that in a refund because you're going to establish a new escrow account with your new servicer, your new lender, and you're going to get back in the mail the check that's been accumulated over time for property taxes and some insurance. Okay, so what can you do with that check? Is because for example, I did a refinance on a client recently, and they got a check back on their escrow for like $7,500. They took about $6,800 of that, and they paid off a high interest credit card that was something like 18-20%, something crazy. So they saved just on that paying down of that card about $280 a month. And their monthly savings was about $230 a month as well. So they're saving, combined with the monthly savings of your mortgage and the payoff of your card from the return of the escrow check, their total monthly savings is over $500. Now we're really starting to get into some giant opportunities to financial plan once again. So look at that escrow check not only maybe as a means of funding some Christmas, but also paying down some high interest rates. And with that, you'll have additional savings beyond just the mortgage savings. Hopefully that makes sense to you. Simple financial planning here. But that's what really makes this thing take off, because that's an unexpected chunk of money that you can use for all kinds of purposes, right? So reach out to me if you could, please. Either text me or call me or send me an email or book an appointment. Because it's always funny, people call or text and I answer the phone 99% of the time, or give you a message that I'll be calling you right back. But let's look at your current mortgage statement. Let's see what that escrow amount is currently, because that's the amount of check you'll have back. That's going to dictate if you have to come out of pocket all at closing, how much we can roll into the note, all the factors, how much of course, your monthly savings are going to be. So I'll show you all the benefits, and you can make the determination if you want to, get this going and have a nice, impactful fourth quarter of the year. So I'm Kevin Fagan, the Mortgage Patriot, on your side. Let's make it a great one.